Well, this is no news that India has now been slapped with a tariff of 25% by US President Donald Trump. Let's find out what will be the impact on the Indian economy, the rupee, trade balance, inflation, and job creation going ahead. For that, I'm now joined by Kanika Pasricha, who's the Chief Economic Advisor, Union Bank of India, who's now joining us. Hi, Kanika. Thank you so much for taking the time out. Kanika, first up, with US tariff on Indian goods now standing at 25%, what is your assessment of the likely impact on India's trade balance in FY26? Are we expecting a material decline in exports to the US?
So first and foremost, let's look at the second part of the question you've asked is about, is there any material decline anticipated in the exports to the US? See, probably yes. If we just do a pure sensitivity analysis, which every economist on the street is doing and claiming 30 basis points impact on GDP growth, what they're looking at is that out of the $87 billion of annual exports by India to the US, if we take into account the non-exempted sectors within which a sensitivity analysis using 25% tariff hike is showing rough number of around 10 to $20 billion impact, which also translates into some 20-30 basis points of GDP. So that is the case. Yes, it is likely. In fact, when it comes to our overall trade numbers, we think that the dynamics may come under some pressure. The headline $12 billion today does not look as much, but there are many moving parts in this equation. It's not just about our exports to the US, it's also about how we play out in the global trade chessboard that will be important. Last but not the least, how this impacts this entire trade tariff saga impacts the US economy, the US consumer demand, because inflation there is yet to feed through. And then eventually its impact on global growth will also decide whether oil prices are here to stay at subdued levels of $70, $72 per barrel. Also, taking into account that Trump does not go big on Russia. If that happens, then in a slowing world, if oil prices see a sharp spike, that may affect us more than just this direct channel of impact via lower exports to US.
And Kanika, if you can tell us which Indian sectors are expected to bear the highest burden of these US tariffs, and what kind of job or revenue loss are we projecting in these sectors on the back of this news flow?
So, at the current juncture, it's difficult to look at point precise numbers or estimates on job losses. But of course, what is the concern is that, the fate of some of the highly labor-intensive sectors hangs on the final outcome of US-India trade deal, some of which are gems and jewelry, textiles, even auto components for that matter. While other sectors like what happens to chemicals also comes into picture, but still, most importantly, what happens to gems and jewelry and textiles is important. Last but not the least, for us, the most labor-intensive sector is agri. There, as of now, the impact is only on shrimps, frozen food, fisheries. The government, by holding its stand, has been able to cap the impact on agri, which is one of the most labor-intensive sectors. And that is a positive we would want to highlight at the current juncture.
Right. Kanika, is there a risk that tariff escalation may spill over to services trade, especially IT and outsourcing, which are key to India's service exports? What can be the magnitude of these tariff impacts?
So, if you would have asked this question maybe 3 months ago, 3 or 6 months ago, we would have said that the impact expected on services sectors is likely to be significant. Because even though the trade tariffs are being imposed on goods trade, merchandise trade, however, the indirect impact of these tariffs on the US economy, especially concerns of recession in the US, was deteriorating the outlook even for services exports, because specifically for software services, US accounts for 60-65% of total software services export demand. along with Canada, to say the least. But what is important is that despite the tariff hikes, as of now, the recession worries in the US, which were elevated 3 or 6 months back, they've actually got delayed or deferred. US economy has been chugging along well. Even though domestic, companies that we have in software services or broader services have shown some concerns in their guidance when they came out for the June after the June quarter results. So some caution warranted, but do we see a sharp slowdown? I would say it's more of wait and watch. It needs to be seen whether the US growth momentum shows a significant drop, and that's not yet been observed.
Okay, and Kanika, if you can tell us, how will these tariffs then impact foreign direct investment flows, especially into India, from US-based companies that were operating manufacturing units in India under China plus one strategy? Will flows into India be impacted because of these tariffs?
It's a very, very pertinent question, and thanks for asking the same, because we think that today we are operating in a world where trade deals come first. First, the trusted trade partners need to be decided. As trade deals, trade relations are evolving, you're getting into a multipolar world. And after the trade deals are struck, capital flows will get reinitiated or reignited to the trusted trade partners. Over the last few months, we have seen that capital flows have actually eased out completely, or at least to a very large extent. Net, FITD basis, calendar year basis, India is witnessing a net FPI outflow from both equity and debt, like overall FPI outflow combined for equity and debt markets. That is a concern because global investor sentiment remains fragile. And of course, US economy, on the other hand, has been relatively chugging along well. On the FDI flows part via China plus one, even that saw a very sharp slowdown in net flows last year. And the story has continued even in the first quarter of this year. So while China plus one may be favorable for some sectors like electronics, but the success of this story is yet to be realized in other sectors. Of course, this is one of the opportunities that India needs to reap in as the world becomes more multipolar, and we need to strengthen the Make in India story that the government has been working on for the last few years.
Right. Kanika, also, do you believe that India should revisit its existing trade agreements or pursue new bilateral negotiations with the US in light of these tariff changes?
Oh, yes, definitely. In fact, for now, if you see, Trump always gets countries' economies on a negotiating table. So when they started negotiations with China, the starting rate was 145. They brought it down to 50-55%, with some sectors being exempt as well. For India, the starting point on the negotiating table is 25%. So if India can negotiate hard, and eventually they must do that, and the government looks quite open for discussion. And even on the other side, Trump's tweets are indicating maybe some more possibility of discussion. Even if not in the near term, this materializes in the coming months. US is the world's largest economy. It is our largest export partner. Sectors like gems and jewelry, textiles, auto components, electronics, pharma. In all these cases, US is one of our top trading partners as well. So negotiating hard, probably, like what China has done, but sitting on the table again and negotiating the terms will be favorable, of course, not just for India, but for the US as well. So they must do that. And they are quite open to the same.
Kanika, thanks so much for taking your time out and joining us and helping us understand what the impact of these 25% tariffs on India will have on the Indian economy. Thanks so much for joining us today. But let's keep it going with the tariff war.